Is the market downturn delaying the next IPOs? Has economic and market uncertainty closed the short-lived IPO window of 2024? In upcoming IPO news, CoreWeave announced a new deal with OpenAI and updates its S1 filing, and Hinge Health is moving forward with its IPO, filing for an IPO on Monday this week. Plus, news from Relativity Space, Figma, and Kraken. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of accessipos.com. And today we're looking at the market volatility. Is this actually holding back companies from IPOing? We're not sure yet. And the big litmus test is Klarna. Klarna was reported to be filing its IPO or making its IPO filing public this week, according to a Bloomberg report. But we're still waiting for it. It's Friday morning right now as I'm recording this, and we haven't got that Klarna IPO filing. I've been on Twitter asking people what they think. Is this thing going to drop? Are they going to chicken out? Or is Klarna going to move forward? And my thought is that, yes, we're going to see this S1 filing later today at some point. Now, I'll talk about it next week on the podcast. And the reason is I think Klarna really has been preparing for the worst. They've been using AI to reduce staff. There was an article in the Business Insider yesterday that said that Klarna is removing people from positions and putting them into a status where they need to find a new position within the company or leave. So I do think Klarna has been getting lean going into what maybe they anticipated was a recession or going into becoming a public company. So that's the litmus test that I'm looking for. Are people really concerned about this market downturn or this, some people calling it a crash? And it's definitely not a crash. Let's take a look at some of the data here. The S&P 500 is only down about 6% on the year. It's just not a big downturn. Now, peak to trough, it's a little different, down about 10% from the peak, which was here on February 19th. I think where people are concerned is some of these big tech names like NVIDIA is down 31% peak to trough. Palantir was a hot stock this year early on. It's down 40% peak to trough. And some people are calling this the bro bubble, that when Trump won the election, these bros who all lined up with Trump, companies benefited from the election, especially crypto companies. Palantir was one of them, thinking that defense spending was going to increase and go to them. But we're seeing that reverse now, and these high-flying tech stocks that were overpriced there for a while, they're coming back down to earth. When it comes to Klarna, we want to look at companies like Affirm, who is another one of these buy now, pay laters. It's probably the best comparison we have to Klarna, and I'm showing a chart on my screen right now. Affirm peaked in February, had a high about 82, and it's now trading around $46. So massive downturn from rival Affirm. And so Klarna may be looking to that company and saying, wow, this might give us some problems going into this IPO. Underwriters are looking at this deal and saying, can we raise the money we wanted to raise? Klarna wants to raise money. They're IPOing for a reason. So everybody's wondering, is Klarna going to move forward? We should know by the end of Friday, and I'll talk about this next week if they drop their S1. And certainly we'll be looking at it over the weekend. But I just think that these companies are a little bit concerned about not so much the market uncertainty, but the economic uncertainty. We're talking about tariffs. We're talking about trade wars with allies like Canada and Mexico and Europe. And certainly the Ukrainian situation is still up in the air. So Klarna may be looking at this and saying maybe now isn't the right time. That doesn't mean that they won't release this the following week. And the article from Bloomberg said that Klarna could release its S1 as early as next week, and that was on March 6th, and we're now at March 14th. But I still think several companies are looking to launch their IPOs, and we'll talk about a few toward the end of the podcast today, where if you get those gears turning now, a year from now or 9 months from now, we'll have a little more certainty on what's happening with the economy, and then these companies can maybe move forward with their IPOs. But I don't think that window of 2024 has closed going into 2025, but it still remains to be seen. I want to point out a tweet from Ben Carlson. He's one of the Ritholtz guys from A Wealth of Common Sense. And he tweeted that coming into 2025, S&P 500 has had just 2 down years in the past 15 years. And I thought it was kind of interesting to look at the last IPO window, which was at 2020, 2021. Stocks were up in 2019, stocks were up 30%. In 2020, stocks were up 18%. And after those 2 years, everyone started filing for those IPOs and started going live in 2021. And 2021 was a great year, up 28% for the S&P 500. And that window closed in 2022. And so kind of following that pattern, in 2023, S&P 500 was up 26%. 2024, S&P 500 up 25%. And I think companies were hoping that there was going to be that third 20+% up year in 2025. And so they were ramping up for IPOs. But after the election, and now with what's happening with Washington, D.C., and everything involved with the tariffs and the changes to government spending, maybe some of these IPOing companies or these aspiring companies who want to be public are holding back. We certainly think that if you're a strong company, if you have a strong story, that you can IPO whenever. And I think a good example of that now is CoreWeave. So CoreWeave, we talked about it pretty extensively last week. CoreWeave announced another deal, this time with OpenAI. Of course, OpenAI is the darling, like the top darling of all AI companies. So CoreWeave and OpenAI made a deal where OpenAI is going to be paying $12 billion over, I think, 5 years for CoreWeave's cloud services. If you've been following the OpenAI story with Microsoft, they sort of have this rival. We all know Microsoft has a pretty big chunk of the revenue going to CoreWeave, and now OpenAI is coming in and saying, hey, we want to give you $12 billion over some time. By the way, we'd like to take an ownership stake. So CoreWeave is going to issue shares worth $350 million to OpenAI in a private placement heading into this IPO. And so we saw an updated S-1 filing from CoreWeave this week as well. And going back to November, CoreWeave was issuing a tender offer to Cisco at about $23 billion, but around the same time they were saying we're aiming to do a $35 billion IPO. And this OpenAI deal maybe makes sense because we were shocked to see that it was going from $23 billion to $35 billion valuation within a few months, and it wasn't really giving an explanation. So it's possible that this OpenAI deal was in the works, and they were using that to help bump that valuation. And investors are going to like that deal quite a lot because they're diversifying away from Microsoft a bit. And if there's, again, two customers that you really want to have, it's OpenAI and Microsoft, both very cash heavy, both at the forefront of AI, and CoreWeave is locking them down as customers. And CoreWeave is just this example of a great investment story that, headed into market uncertainty, may not be that important to this IPO because CoreWeave's growing so fast. Institutional investors are looking for alternatives to the NVIDIA story, the Palantir story, the Apple story, the Mag 7 that have just gone up and up and up, a lot in part due to the passive investing trend, but also because of the technology and AI. And so investors are looking for alternatives, and CoreWeave fits this bill where it's the AI pure play coming out of the private markets, the right company at the right time. This could really help the IPO market, especially for aspiring AI companies that want to be public. I'm not sure about the Klarnas of the world or the Hinge Healths of the world, but this CoreWeave deal could really ignite AI, and it might also prop up some private valuations in the startup world, which are going pretty high. Anthropic's around $60 billion now. OpenAI was talking about raising at a $340 billion valuation. I'm not sure where that lands. This CoreWeave IPO we'll be telling, Klarna going public or not, is another big deal, and we'll keep an eye on it. Next up, Hinge Health filed for an IPO on Monday, March 10th, and we got the heads up that that filing was coming, just like we got that heads up for Klarna, and we haven't seen it yet. Hinge Health is essentially a digital clinic for physical therapy. They call it muscular skeleton health, but we're really talking about physical therapy. Hinge Health is addressing some of the chronic shortages of qualified healthcare providers, especially in physical therapy, but it's also digitizing health and finding ways to help patients have better outcomes at a lower cost. So if you have a shoulder pain or a knee pain and you go to the doctor and they say you need physical therapy, instead of just going to the physical therapist and having to drive wherever that is, get an appointment. Sometimes you're waiting months to get an appointment for physical therapy. Hinge Health is working with employers to essentially say, hey, if you have pain in a part of your body, let's work with Hinge Health to find ways to mitigate that pain. Maybe we can save you a trip to the doctor. Maybe we can save a surgery if you just implement some of these tools. And by the way, we have these qualified physical therapists and health providers on our app who are going to coach you through it. And so this is maybe a place where medicine is going. So Hinge Health is really playing on this trend of digital medicine and lowering healthcare costs. And if anybody's ever had a shoulder pain or some sort of pain that you needed physical therapy, you know that physical therapy can be life-changing. I had a friend who was a very good physical therapist, and he used to help me with some shoulder pain I had from years of throwing baseball, knee pain from running, and I had back pain that resulted from swimming. And what was happening was I wasn't stretching some of the muscles in my stomach that led to back pain. I went to physical therapy, and they diagnosed that right away. When I went to the doctor, I had to get x-rays and had a radiologist look at my back, and they pretty much said, there's no problems with your back. So they sent me to physical therapy. I started doing these exercises with a physical therapist, and it absolutely changed my ability to swim. I no longer had back pain, so now every time I swim laps, I do these stretches. And I didn't need to drive 20 minutes to that physical therapist for 2 months to get that service. They could have done that through the app. And what I realized recently was that my former employer had Hinge Health. My wife was about to use it. She never used it. But I saw my sister this weekend, and she is using Hinge Health for shoulder pain or something. And she showed it to me, and it's a pretty great app. You go on there, you have a coach or a guidance counselor or a motivational partner. There are videos where you can learn how to do the movements. There's a way to set up your camera, and you can do the exercises, and it'll tell you if you're doing it right or wrong. So this is really an extraordinary tool that you can do from the comfort of your home on your own time. And really anything with physical therapy is you have to do the work. You can't just do a little bit and hope it's going to go away. You have to do the work week in and week out. My friend who was a therapist used to tell me that if you're not willing to do the work, the pain's going to stay. So just looking through this S1 filing online here, so we noticed this is another Morgan Stanley deal. The CoreWeave, we talked about that. That was a Morgan Stanley deal. So Morgan Stanley seems a little bit more open to taking some companies public. And we applaud anytime a company goes public. So we want to see more companies going public. So kudos to Morgan Stanley. Although this is going to be a smaller deal. Hinge Health raised money, about $400 million in a Series E in October 2021. And that valued the company at about $6.2 billion. And from what we've seen so far with this deal, it looks like it's going to be valued lower than that. And really anything under $5 billion is going to be hard for retail investors to get access to this. Now, it would be nice if Hinge Health was going to run a directed share program through this filing. It's not in the filing. It'd be nice if users of the app could become IPO investors. We're not seeing any evidence of that. What's really notable is that Hinge Health sells to corporations. And this is not like you don't go to Hinge Health and open up a personalized account. You become a customer, you become a patient through your company. And you can see Morgan Stanley is on there. Some really big companies here though: Target, Hyatt, Barclays, Dollar Tree, Family Dollar, GM. So lots of companies use this for their benefits program. 49% of the Fortune 100 are customers. They have 2,250 clients and 98% client retention, which that's pretty extraordinary. If your target and your employees like this, then you're going to want to keep it. And that tells me that the employees are really enjoying this. When I asked my sister about this, she said she did like it. She did say that maybe they were a little annoying with contacting her a lot and saying, oh, get back to your work. You're not doing your work, which, you want someone to motivate you. And my wife said when she signed up for this, she got contacted a lot. She never started using it. So I think once they get your information from the company, they're pretty aggressive with motivating you to use the product. They probably get paid whenever people use the product. Looking at some facts and figures here. The year ended 2024, December 31st. Some key figures here. Revenue, $390 million. That's up 33% year over year. That's a great number that I think shows strength going into this IPO. And with trusted clients across industries and high client retention, there's probably an opportunity to raise their fees and also bring on new clients. They just point out the Fortune 100. We know there's 500 companies in the S&P 500 and lots of large private and startups, all kinds of companies out there that could benefit from this. If they're showing that there's data to reduce overall healthcare spend, or if they're showing that maybe this is a benefit that employees really like, it might attract talent. This is really a win-win for Hinge, for the corporations, and for the patients or the employees. Overall, this is a very cool company riding that trend of health digitalization in a way you wouldn't think about it. It's not like a health data company. It's a health app, and it's going to help a lot of people at a very low cost. It seems like everyone has a phone and can download this app. You can do your exercises on your own time. You do it from your bedroom, whatever hour of the day. A lot of really promising trends here from the health digitization standpoint. And then it's got the revenue for Wall Street investors. Now we only need the momentum in the stock market to stop going down. But as far as I can tell, Hinge Health is moving forward with this one. And I think they should, because if other stocks are coming down and your stock is coming out at a fair value, I think there's a good chance that there's going to be some buyers for this one. Hinge Health is going to trade on the NYSE, and the symbol is HNGE. In terms of the timing here, early April looks likely, maybe closer to mid-April. Of course, that's going to happen while I'm on spring break with my kids. So we'll be watching this one from wherever it's happening. But I don't think that the Hinge Health IPO is going to give a good shot for retail investors to invest. I just don't think there's enough float that's going to go out there. And it doesn't have a huge investor base. I see Coatue, Tiger Global, Bessemer, so some pretty big names there, but not a lot of corporate investment, it seems like. There's a few of these 5% or more holders: Coatue, Tiger Global, Bessemer Ventures, Comico, Insight. So some pretty big names here from the venture capital world, but not a deep bench, not a lot of investors. And I don't see any corporate investors here. So I just don't think that there's a very good opportunity for retail investors with this one. It's one to watch. It's one to maybe hold for the long term, as this is a pretty good trend with some nice growth. But nice to see digital health, a modern, innovative company, enter the markets where retail investors can either buy the stock outright or own it through passive index funds. So watch for that one. Probably mid-April. We'll see how the market shakes out between now and then, but this does look like it's going to go forward, so we'll be watching it very closely. All right, we're going to finish out the show today with some news regarding IPO Radar companies. So these are companies that we are following on the Access IPO's website. These are companies that I've identified as potential IPO candidates between anywhere from next week to 5 or 10 years from now. And so we follow these companies that are interesting to investors, and not so much just IPOs in general, but these are companies that are private that people want to invest in. So that's my criteria for these radar companies. And a lot of people are looking to own them before their IPO. So if you can invest in these companies pre-IPO, that's a backdoor way to participate in the IPO. So this first story I ran across on Twitter, ex-Google CEO Eric Schmidt is said to become a Relativity Space investor. This is actually a story from January 8th. So we knew that Eric Schmidt was sniffing around Relativity Space. Of course, Relativity Space is a 3D printed rocket company. These guys invented this massive metal 3D printer that can print a rocket, and they claim that 95% of the parts are 3D printed, or they reduce parts by something like 95%. This is meant to be a company that can revolutionize space travel by lowering the cost of the rocket building. And so Eric Schmidt was sniffing around. It said here once valued at a $4.2 billion valuation. And from what we could tell, Relativity was sort of struggling a little bit. The startup struggled to fundraise. And then next thing we know, Eric Schmidt is becoming the CEO of Relativity Space. And I saw this on Twitter. The current CEO of Relativity Space, this is a company that got their start from a cold email to Mark Cuban. Founder story, this guy Tim Ellis and Jordan Noon were Blue Origin engineers. They sent a cold email to Mark Cuban and received a $500,000 seed funding round within days. And so they spun up this company. They went into Y Combinator in 2016, and they built these 3D metal printers. And so now Eric Schmidt is interested. I'm kind of looking at this and thinking, well, why is Eric Schmidt being part of this? He's a talent grab. They were able to get Eric Schmidt as an investor. He's a very active investor, but they were also able to get him to become the CEO. That's a rather extraordinary development for this company. Eric Schmidt, of course, was the, quote, adult in the room back when Google was in its early days. The two founders of Google were sort of renegades, didn't know how to run a company. Eric Schmidt came in and helped to lead the growth, helped to make it become a public company. Maybe Relativity Space is on that same trajectory toward high growth and a public future. But part of me wonders if Eric Schmidt is just in this, like it's a childhood dream, kind of like what's going on with Bezos and Elon. I mean, they started these companies because they wanted to go to space. Bezos claims that he was a child watching space launches and always wanted to go to space. And when he became a billionaire, he did it. I feel like Eric Schmidt may be in that same boat. He just wants to live that childhood dream of going to space and being part of the space economy. Of all the various companies that he's invested in and all these growing industries or these emerging industries, the fact that he went with Relativity Space was kind of a shocker to me, but that's what happened. So New York Times got the story on that. Relativity Space, we're going to watch it from here. And with his leadership, that may lead to more fundraising. Maybe he's going to go out and help them raise money. Maybe he's going to help take them public. We don't know, but definitely an interesting development. Somewhat of an old guy at 69 years old, helping these younger guys build this business, but exciting future for them. So we'll be keeping an eye on that. Another story in the news is Figma. Figma is a collaborative software program for design and application development. It's a SaaS, and Figma was supposed to merge with Adobe back in 2022 or 2023. The deal was blocked by regulators. This was somewhere around a $20 billion deal. But New York Times got the story here. Figma is in talks with bankers to explore an IPO this year. So this is a good example of the market volatility maybe not affecting everybody. Figma wanted to go through with this merger. Instead, it's going to choose an IPO. And of course, we prefer that here. What's funny about this story is that there was this article in the New York Times on March 6th about the StubHub IPO. We talked about StubHub last week. And I noticed in the URL of the story that Figma was in there. It said Figma, StubHub IPO. But the story was about StubHub, Discord, and CoreWeave. So I tweeted about this. I said, hey, New York Times, is Figma coming out with an IPO too? And then a day later, the story was confirmed that Figma is talking to banks about an IPO. So whatever reason, they decided to pull it from that story, or the New York Times wasn't quite satisfied with their due diligence before releasing that to the public, or maybe it was just a big enough story that they felt like they should hold it to the next day. So I felt sort of investigative about that, finding that little URL blip there. That puts it back on my radar. It's been on our radar, but when it's on my radar and we get a news story like this, it's going to raise in the ranks of my upcoming IPOs page. It's not a scientific page where I have some sort of ranking system. It's really sort of an art form where I try to find these stories and then place the companies into the list of 70 or so on the upcoming IPOs list where I think it falls in terms of the timing. So when it says here with bankers to explore an IPO this year, that tells me we're probably looking at October, November, maybe December. One last news story here. Crypto exchange Kraken is preparing for an IPO in 2026. Kraken is a cryptocurrency exchange company that we expected to be thinking about an IPO because Kraken's one of these high-profile cryptocurrency exchanges like Coinbase or like Gemini, which is another one that has made a mention of going public. Actually, Kraken is known officially as Payward Inc. And so it's saying here that it's seeking to go public as soon as the first quarter of next year, according to people with knowledge of the matter. This is coming from Olga Karif from Bloomberg. So with the loosened regulations, or maybe not necessarily the loosened regulations, but we all know that this new administration came in. It is claiming to be more crypto-friendly. They've put more crypto-friendly leaders into the SEC, and they are dropping lawsuits. It says here the SEC recently agreed to drop its case against Kraken. Now that the SEC lawsuit's out of the way, cryptocurrency is back in vogue. Kraken is taking these early steps to go public. We're hoping to see more of these types of companies move in that direction. The big two other currency companies that are private that people want to see public is Circle. Circle has a stable coin that is going to be suited pretty well for international payments. And the other one is Ripple. And Ripple gets a lot of attention in the pre-IPO markets. It's got its XRP currency. It has also recently cleared up some SEC cases that were filed against it. I believe they're in the clear, or they're close to being in the clear. And so a lot of pre-IPO investing opportunities in Ripple, but a lot of people just really want to own that XRP. They think that's going to be the next Bitcoin or whatever, because both of these companies, Circle and Ripple, are very well suited to use their currencies or use their technology, their APIs, their cryptocurrency for international transactions. And the current international transaction world uses Swift, which, is everybody knows, is inefficient and slow. The best use case I've seen for cryptocurrency all over the place is this Swift replacement, or facilitating international transactions by converting the home currency into a stable coin or another currency, allowing the transaction to occur, and then converting it back to the home currency. They're going to be able to facilitate international transactions instantaneously at a very low cost, whereas with Swift, the transactions are slow and expensive. So Kraken is preparing for an IPO. Circle was on our list of upcoming IPOs. I believe it's still there. I think it's still pretty high. And Ripple is the one that I think would really explode in the market. People are very excited about Ripple. There's a lot of people who really love that XRP currency. I'm not entirely sure why. I think just the way that it's structured, they think it could be the next Bitcoin. I think there's a lot more float than Bitcoin. But this is a good sign for IPOs if the cryptocurrencies feel like they are welcomed by the markets, if they are not being targeted by regulators, and they have an ally, President Trump, in the White House saying that crypto is good and we're not going to stifle that growth. You have leaders at Robinhood talking about the potential growth of cryptocurrency and tokenization. So Kraken says here it's targeting this IPO first quarter 2026. We hope it's not the only one. We hope this kicks off a whole new round of crypto IPOs. There are plenty in the pipeline. That's all for this week's podcast. Next week, I hope we're going to be talking about Klarna. That was the plan this week. It didn't happen. But we still have Hinge Health, and we still have CoreWeave coming up through the pipeline. So keep an eye on all those names this week. Watch for my newsletter. If you're not on my email list, head over to accessipos.com. Sign up for my email list. Right now, it's twice monthly. I may be going to weekly, depending on once I get the schedule figured out for the podcast and my publishing dates here. But for now, it's twice a month. Sign up, you get a free download, the startup to IPO process, how that works. If you like what you're hearing, please subscribe to the Access IPOs podcast wherever you consume your podcasts. Leave a review if you want to support the show. And if you're looking for other ways to support the show, check out the links in the description of this show or any show to find out how you can support us. That's all for the show this week. Thanks for listening. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.